All right, let's dive into Funko's third quarter earnings, because this one was a real head-scratcher. The company actually missed on revenue, but then the stock took off. So we're going to unpack exactly what investors saw that got them so excited.
So yeah, this is the big question, right? Revenue comes in light, and you'd normally expect the stock to get hammered. But Funko? It jumped over 10%. The answer isn't on the surface. It's buried a little deeper in the numbers, and in the news story that management is starting to tell.
And this right here, this slide just lays out the whole puzzle perfectly. You see the revenue miss? They came in about $10 million short of what Wall Street was looking for. But then look at the bottom line. Adjusted earnings per share, or EPS, came in at 6 cents. The expectation? Just 3 cents. They doubled it. And that is where the good news starts, because it shows their profitability is getting better way faster than anyone thought.
Okay, so let's get into the nitty-gritty and see how they actually pulled off that big earnings beat, even though sales were down.
So that top-line number, $250.9 million, it's a pretty big drop, down over 14% from this time last year. Now, management says part of this was on purpose. They're doing something called SKU rationalization, which is basically just a fancy way of saying they're cleaning up their product catalog, getting rid of the stuff that doesn't sell. So even though the sales number is down, the idea is that the sales they are making are higher quality.
Now, this is the number that really got Wall Street's attention, the gross margin. At 40.2%, it held up incredibly well, way better than expected. This is the whole ballgame right here. It means the company is making more profit on every single item it sells, thanks to some smart price increases and managing costs. This is what gave investors confidence that management has a handle on the business.
And if we look at where the sales came from, the classic core collectibles, your pop figures still make up the lion's share, about 80%. But even those were down 12%. And Loungefly, their trendy accessories brand, also took a little dip. The fact that both main parts of the business were down really drives home the key takeaway. This quarter wasn't about growth, it was all about control and discipline.
And you can see that control on the balance sheet. Look at the inventory number. It's way down. That's a sign of really good management. They're not sitting on a mountain of unsold stuff anymore. But, and this is a big but, they're still carrying a whole lot of debt. We're talking $241 million, and that's definitely something you got to keep an eye on.
So, with the finances getting cleaned up, the story is now shifting to what's next. And that future is being led by a brand new CEO, Josh Simon, who's come in with a totally new game plan.
So, on his very first earnings call, Simon put his cards right on the table. He's calling his new vision the Make Culture Pop strategy. It's all about putting Funko right in the middle of what's hot in pop culture, built on these 3 big ideas.
So what does all that actually mean? Well, number 1, culture. They want to be faster at jumping on trends. Number 2, creativity. They want to create stuff beyond just the classic vinyl pop figures. Think new products, new ideas. And number 3, commerce. Get smarter about selling overseas and make their own website a better place to shop. It's really a full-blown plan to get the brand's mojo back.
And you know what? This isn't just a bunch of buzzwords on a slide. They're already doing it. Their new Bitty Pop line is a certified hit, even landing on Walmart's top toys list. They're moving way faster. They got a product for a hot new show on the shelves in just a couple of months. And critically, they locked in their deals with the big dogs like Disney and Warner Brothers, so they'll have all that great content to work with for years.
Okay, so we've got management's big long-term plan, but how does that connect back to why the stock jumped right now? Let's tie these 2 threads together.
This really shows you the 2 different mindsets. Management is pitching this awesome long-term turnaround story. But the market cares about what's happening today. And what investors saw was a company that crushed its earnings number, showed real discipline on costs, and looked like it was in a stable spot heading into the holidays. So they rewarded that right away. They bought into the here and now story of improving profits. And the company's forecast for the next quarter, for Q4, kind of backs this up. They're not promising the moon. They're not saying sales are going to explode. Instead, they're guiding for stability, a little bit of sales growth, and this is key, keeping that gross margin strong at around 40%. It's all about being profitable and predictable.
All right, so with all of that in mind, here's our take here at Talk Tickers. What should we all be watching for when they report their next set of numbers? So, we think revenue will probably land right where they said it would. The real make or break will be how well those new products like Bitty Pop and that KPop Demon Hunters line actually sell during the holidays.
But you know what the #1 thing to watch is? It's that gross margin. If they can keep it near 40% again, that's the proof that this turnaround is for real.
So after digging through everything, we're kicking off our coverage on Funko with a market perform rating.
And here's the thinking. On the plus side, there's no doubt their profitability is getting better. Management has control, and the new CEO's plan is clear, and it's already got some early wins. But there are a couple of big things holding it back. For one, revenue growth is still a prove-it-to-me situation. And two, that $241 million in debt is a major weight on the company. So for now, it feels pretty balanced. The big question is, can they turn these profits into actual growth again?
And that's our breakdown of Funko's third quarter. Just a reminder, this is not financial advice.